Thursday, April 28th, 2022, Maneco 64, home of alternative economics and contrarian views. So the Bank of Japan is at it again. It almost feels like they're on a kamikaze mission trying to destroy the Japanese yen. We're going to look at that today. They just had their policy meeting overnight. Before I start, I like to make a few announcements. First one is I did a really interesting interview for those of you who are into investing or even trading short term with North Star Bad Charts. They have a YouTube channel. They also have a blog where you can use their services. You have to pay for those services, of course, but they also have a big presence on Twitter. And we did an interview and I posted it yesterday evening, looking at the long-term technicals for various securities, commodities, gold, silver, interest rates. So I highly recommend it for those of you who are into technical analysis, and even those of you who aren't, you might find it interesting. It's over an hour long, but it's worth listening to if you have the time. The other announcement is one of my viewers sent me a link and it's about farming. It's a UK farmer. He's got a YouTube channel and he's very interesting, very knowledgeable, of course, about farming, and he's a good presenter, actually. And I'm gonna put a link to his latest video in the description, up in the cards. I'm gonna put a link as well to my interview with North Star Bad Charts in the description and up in the cards. So the YouTube channel is Harry's Farm, and his latest video is Harry's Farm Updates plus why food prices are going up so fast. Very, very interesting. I learned a lot just from watching this 14-minute video, and I think you could as well. So the Bank of Japan, what have they done now? Well, I got this notification from my FT app. Yes, I do subscribe to the FT. I know it's an uber globalist organization, but you need to know what the enemy is thinking, and they do report on market events. They are pretty good at that. Sometimes they don't have to use their bias or push any agenda, and they just report things. It says yen hits multi-decade low after BOJ vows to keep bond yields at zero. Japan Central Bank defies global shift towards higher interest rates. So why is this so important? And I spoke about this as well on April 1st with Weston Nakamura, and you can listen to that interview as well. He's based in Tokyo. He does work for Real Vision Finance, and we spoke a lot about the BOJ policy, the yen, the JGB yield. So I recommend you watch that as well. Well, I think what the Bank of Japan is doing here is trying to help the Federal Reserve. And why would the BOJ help the Federal Reserve? Well, because they're all part of the same group, the central bankers, especially the Western central bankers like the ECB, the BOJ, the Bank of England, the RBA in Australia, the Federal Reserve in the US, the Bank of Canada, and they all meet. The heads of all these major central banks, they meet every other month. Yes, every other month. And they have a very nice dinner with very nice wine in Basel, Switzerland, and they stay there. They have their own kind of private hotel. And actually, technically, it's not in Basel, Switzerland. It's at the BIS headquarters, which is a sovereign country, really, if you want to call it that. It has sovereignty in Switzerland. It's above Swiss law, not criminal law, but all other civil laws and stuff. And yes, they meet at the Bank for International Settlements. And I highly recommend this book, The Tower of Basel by Adam Libor, excuse me. I've recommended it many times. So it's the shadowy history of the secret bank that runs the world. And yeah, so they meet every other month, so 6 times a year. And I'm sure they've been talking about how the Bank of Japan is going to help out the Fed, because the Fed is in a bind right now. They've got prices running out of control, and they can't really tighten very quickly. And if they do, they need someone to support their bond market. And how would Japan support the bond market? Well, if you look at this data here, just type into Google, biggest foreign holders of US debt. Number 1 is Japan. So as of January 2022, Japan held 1.3 trillion of treasury securities. And why is that? Well, because the Bank of Japan is doing so much QE. They've kept rates negative, the policy rate negative. They've promised now to print as much as needed to keep the JGB yield not just below 0.25, but near zero. And seeing that demographically, Japan has a lot of retirees, a very old population, very big savers. It's going to push Japanese savers into treasuries. So is a 85-year-old Japanese grandma going to look at the markets and say, well, I'm going to buy treasuries? No, I would say it's more nuanced than that. Her, let's say, pension pot is with a big fund manager, insurance company, and they move these funds into treasuries. And this keeps the demand for treasuries relatively strong, seeing that now we're seeing a move to de-dollarization, especially with all the sanctions on Russia. A lot of other countries in the global south are trying to move away from the dollar, and at the same time, you've got the inflation problem with CPI almost at double digits, and the Fed saying they're going to raise aggressively. We've seen yields, the 10-year yield especially, move up to almost 3%. And more importantly, if you look at this chart here, long-term chart, it looks like it's breaking out here, the yield, and that the 40 years of lower yields is coming to an end. So I think this is a desperate last stand by the BOJ. It's a kamikaze mission. And who would suffer from this kamikaze mission? I think it would be, we're seeing already, it's the Japanese currency, the lowest it's been since 2002. I guess that is a couple of decades. But also against real money. And for those of you who don't know yet, you might be new to the channel, what's real money? Well, it's gold, of course. Look at how the price of gold in yen is just going through the roof. Yes, it's come off a little bit here, but yes, that's who's suffering here. It's the Japanese currency. So is there any other consequences from this policy of debauching their own currency by the BOJ? Well, there is a political one, because, yeah, the consumer and also businesses are going to start getting hurt. And this is what the FT says. The BOJ believes Japan's underlying economy is too fragile to tighten monetary policy, but it risks upsetting politicians and the public as the weak yen drives up the price of imported goods. Even for exporters of finished goods from Japan, they might have a problem because they need inputs coming from abroad. And if the input prices are too high, it's going to hurt them too. So it's not really clear that it's great for exporters. So what's the take on what's happening in Japan with the BOJ as it relates to Western markets, like US Treasury market, stock market, currency markets? Well, I think if the BOJ and Kuroda-san weren't performing this mad monetary policy, this mad kamikaze mission, we would have seen already the 10-year yield maybe at 3.5%, and we would have seen the stock market in the US even lower. I think things would be even more unhinged. But eventually, this is about fiat currency collapse, and the dollar is not immune to that. Yes, gold and silver have been hit hard recently in terms of dollars, but you need to look at the bigger picture. You need to realize that the dollar index is a measure of fiat currencies. It's not a measure of real stable value, I would say. So with that, let's quickly look at where the markets are this morning. It's 8:15 a.m. London time. So we'll start with the usual. We'll look at spot gold. We're at 1882.75. It's down about $3. Range has been 1887 to 1872. Silver is down 6 cents, 23.24. Low has been 22.98. The high 23.42. Just wanted to show you a chart of silver here, and this falling wedge. This is a weekly chart. You see, we broke out of this falling wedge, went up to almost 27 back in the beginning of March, and sometimes these breakouts, they keep going. Sometimes they come back and retest the top of the wedge. And there's as you can see here, another trend line coming up from, let's see, the middle of December last year. It looks like we're holding that. So does that mean it's going to hold there? I don't know, but it looks interesting, that chart. Just thought I'd show you that. So to the stock market, I saw yesterday that the rally we had during the day in the stock market fizzled out. Stock market finished virtually unchanged for the day. So things are still not really solid for the stock market. This morning, as I speak here, the Dow is up 0.75% or 240 points. NASDAQ 100 is up 260 or 2%. The S&P 500 is up 1.2% at 42.39. The FTSE is up 0.5% at 74.68. And the Euro Stoxx 50 is up 50 points or 1.3% at 37.80. To the fiat currencies, sterling is up slightly, 0.1% at 125.50. The euro is down 0.25% at 105.33. And now to the dollar versus the yen. Yes, we are at 130.06. So the dollar's up at 1.25%. So some people think that this 130 level could trigger the BOJ with the help maybe of the Fed and other central banks to intervene in the FX market. We'll have to see. The high for the dollar has been 130.67 and the low 128.33. Yeah, and the other thing is, well, one of the reasons that I guess the dollar is going up against the yuan here is because Japan is an important trading partner and competitor of China. So the Chinese might want to keep their currency weak as well if the Japanese are going to weaken their currency. So the dollar is up 0.5%, continue to rise here versus the yuan at 662. And the dollar is up slightly versus the Swiss franc, just below 97.00. Aussie dollar is up 1/3%, 71.50. The dollar is down slightly versus the Canadian dollar at 128. And the Kiwi dollar is down 0.2 at 65.29. A quick look at the general commodities. WTI crude is down 1/4%, 101.30. Brent crude down 1/4 as well at 104.58. High-grade copper is unchanged at 4.47. US nat gas is down 0.5% at 7.31. And to finish off, let's look at the 10-year yield. 10-year yield is at 280. It's down 1.5 basis points. And the JGB, let's look at the Japanese government bond yield. Well, the high today was 0.25. It shows that, the market wants to test the BOJ because it wouldn't be going up to that level. But the last quote I have here is 0.22, so it's down almost 3 basis points. And the Bank of Japan said they want to keep that rate near zero, not just like below 0.25. They actually want to drive it lower, so it looks like they could even push or accelerate the QE or the asset purchases. And how do they do that? Well, they just create yen entries out of thin air as easily as that. And that's why it's a crazy system. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And I wish you all a great day. Take care. Bye.